Hey, welcome to the Bitcoin Bottom Line. I'm your host, Steven McClurg. My co-host, CJ Wilson, is out today, but I have a very special guest, Giang, the head of ETFs at Nasdaq. Welcome, Giang.
Thank you so much for having me.
Well, let's get right into it. I'm really curious about your experience working with ETF issuers in the United States at Nasdaq. Um, what's it like? What's the process like? Just getting an ETF up and launched?
Yeah, so I've been in the ETF industry, for close to 10 years, working specifically on ETF listing exchanges. So, I have a long history rotating through the different exchanges, and I'm really excited to be at the best exchange at Nasdaq to support issuers in launching their ETF process. To be listed on exchange, an ETF or any security that's listed on exchange has to meet a certain specific set of requirements for that security. And so, we work closely with the issuer from a pre-launch standpoint to navigate that regulatory process. So providing guidance on whether an ETF coming to market meets our, we call them generic listing standards, which is the exchange's set of rules that have already been approved by the SEC. And if the ETF meets those rules, they can come to market fairly quickly. If it doesn't meet that generic set of rules, then we do have to go to the SEC and file what's called a Form 19B4, and then go through the regulatory process with the Division of Trading and Markets at the SEC to get that product for approval. And that process, can take anywhere from 30 days to 240 days. And at the 240 day, it could go through a disapproval. So it's for more newer products that don't meet our rules, that's the path that it goes down. But we're here for our issuers to support them throughout the life cycle. Issuers choose Nasdaq because our brands align so well with issuers in terms of innovation and driving for the market for the future. So we support them from a regulatory standpoint when the product's listed and traded, from a capital market standpoint, and also marketing and distribution as well, because there's a lot of ETFs that are in the market now. So being able to differentiate is very important.
That's interesting. Well, and I think what a lot of people are interested in is Bitcoin ETFs, right? Particularly Bitcoin spot ETFs. And it's been quite a journey from the first time that the Winklevoss twins filed for a Bitcoin ETF in 2013 to all of the rejections that came in 2017. And then we have a resurgence of filings that happened at the beginning of this year. And a lot of people are kind of confused. You just said that, well, if it doesn't meet the listing standards, then you have to file what's called a 19B4. And I think a lot of people have heard about, oh, this firm has filed a 19B4 to go along with their ETF filing. And again, I don't think people really understand what that means. So first of all, can you break down what disqualifies a certain product to just be listed as opposed to having to create a rule change?
Yeah, so over the years, as more and more ETFs come to market, the exchanges work there with the SEC to adopt certain listing rules to our rule sets, for products that have been listed for some times. For example, over the years, we got generics for actively managed ETFs. And then most recently in 2019, we got generics for what's called an ETF rule-based product, which is, majority of ETF that are coming to market this day, as long as it's in compliant with Rule 6011 with the Division of Investment Management, then that fits our listing rules. So the thing about the Bitcoin products, especially the spot-based products, is that we don't have generic listing standards for that. That's, it's a first of its kind. The SEC typically like to see seasoning before they allow exchanges to adopt generics for them. So Bitcoin ETFs is something that's really exciting. It's brand new. We never had any, or a spot-based Bitcoin. We haven't had that yet. So that's why we need to go to the SEC again to ask for approval for that. It was great to see, one of the first Bitcoin-related ETF come to market the other week. So, Valkyrie is one of the first movers in that. So we were excited to be able to support those products. And that was a generic listing. It was an ETF rule-based product. And that met our generic listing standard because it was filed under the Investment Company Act of 1940. The SEC Division of Investment Management found it to be compliant with the ETF Rule 6011. And so that met our generic rule set for that listing rule. So when you talk about a spot-based Bitcoin product or others, We do need to go, an issuer like yourself would file in S1, or it's under the Securities Act of 1933. So you do have that registration statement out there. And once that's filed, from an exchange standpoint, we need to amend our rules to be able to list it. So that's why we file a 1984 with the SEC Division of Trading and Markets to allow us to amend our rules to list the product.
Yeah. Well, let's go back in time a little bit, because you talked about some of the other generic listing standards that have been adopted over the years, one of them being active strategies. So when I first got into ETFs, it was pretty much only passive. You had to file for passive ETFs. You had to have a third-party index provider that you followed the index for. And it was a pretty frustrating process, right? I mean, a lot of these third-party index providers didn't really provide much. A lot of the times, managers like us, we would write the rules, hand them over to the index providers, and then paid them 20 basis points for the privilege of using the rules that we wrote, and then created IP for them that they pretty much used to perpetuity. And we were one of the groups that really were fighting for actively managed ETFs and to have affiliated indexes, right? I mean, we were writing the rules anyway. It was like, why we might as well own the index, own the IP that we're following. But if you go into the active space, then it eliminates a lot of those headaches, right? And I mean, some of the things that we were doing back in the day were actively managed bonds, right? And back then, it was sort of like active products were used in mutual funds and passive were in ETFs. And with Dodd-Frank, it sort of hurt the mutual fund industry and pushed a lot of mutual fund issuers into ETFs. So yeah, we were really involved in that rule change and getting active products out. Can you tell me a little bit about, from your perspective, that history of moving into active products being a generic listing?
Yeah, I mean, as you talked about, the early days of ETFs were very index-based and passively managed ETFs. And, as you said, a lot of the investment advisors have their own IP, and they were really the driver around a lot of the index. I mean, there are index providers that have a lot of creativity and, do add a lot of value. Like, for example, Nasdaq has an index business that really is one of the leaders in terms of innovation and thematic investing, and we're expanding our capabilities into derivative base, ESG focus, fixed income, and so forth. So, there definitely is an index provider for all the different needs of an issuer. So there's definitely a lot of different parts of the index segment for there. But as it relates to active, it's still very early stages. We only got the SEC wanted to see actively managed ETFs come to market. So in the past, before generics, each one of these actively managed ETF required that 1984 that we talked about. And it adds a lot of time commitment to be able to launch the process. So once the generics happen, it gives that certainty for the issuer in terms of time to market, and that certainty in terms of approval, so that you can plan better and really focus on more product development. So the past few years has been a changing way for active management. We really have seen a growth in terms of actively managed ETFs coming to market. The SEC recently approved actively managed ETFs who don't have to disclose their holdings on a daily basis. So we've actually seen a big growth in that segment. And for the first time in a while, we're seeing actually more new actively managed ETFs come to market than passive ETFs. So we're still in very early innings. I expect that to be a big area of growth for ETFs in terms of assets. And like you said, like actively managed fixed income is an area that can really, that has a lot of benefits to active management as well.
Yeah, I mean, as a matter of fact, being a former fixed income manager, I can imagine even managing a passive fixed income product anymore. With 10-year treasuries at 163, the high yield global bond index is 4.6% right now, when inflation is at 5.4, or at least CPI is at 5.4. It's very hard to imagine that you are getting any kind of real yield out of anywhere in fixed income. I mean, you pretty much have to hold a portfolio of high yield bonds and then sprinkle in some Evergrande and some others just to get a yield over CPI, right? So I think active is really the way to go right now. It's really the only way that you can get a suitable yield for investors. But what are some of the other areas? I mean, we've seen a lot of success with some of the other issuers. What are some of the issuers that have really pushed forward on your front on the active ETF side?
Yeah, I mean, we've seen a lot of issuers come to market looking to launch actively managed ETFs, and we're seeing mutual fund companies who in the past have always been very focused on mutual funds and was watching the ETF space, and now are making announcements that they're going to be entering the ETF space, or they're converting their mutual funds into ETFs. So it's really a great momentum that we're seeing in terms of just the overall adoption of ETFs. I mean, one of the great things about the Rule 6011 as well, the ETF rule, is that it allows for custom baskets. So it makes the ability to manage large portfolios of particular fixed income a lot more efficient, so that the creation redemption process is more efficient for market participants, and in return that provides better execution quality and experience for the end investor. So we're really excited about that space. We're working with some issuers on semi-transparent ETFs, but also fully transparent ETFs. And it's not just fixed income that we're seeing benefits in. We're seeing derivative-based products that are actively managed. The Bitcoin future product that is in the market is also actively managed as well, just to give you that flexibility in terms of portfolio management.
Yeah. Now, some of the interesting things that I like are these levered and inverse ETFs. I was involved in a with Ridex, who was sort of known for that. Became a part of Guggenheim, and there were 1x, 2x, 3x levered, both positive and inverse ETFs that were coming out there. What's the current state of that type of product?
So leverage and inverse products definitely gets a lot of attention from the SEC, from the general public in terms of the product type, and and from our perspective, it's all about education and awareness of what you're holding. So when we work with issuers that are launching leverage and inverse products, we do stress that disclosures are important. Making sure that investors understand the risks involved with investing. So it's an area that it's really about, it's a fit for clients. It's important for us. Investor protection is important for us, and having options and providing choice for investors is also important.
No, that's great. Well, I also know Nasdaq's doing some really cool things, and I know that you're leading the charge on that. But I want to back up again a little bit. And how did you get into this business? What made you decide to go work for Nasdaq?
Yeah, so I've always been in the ETF space, and it's something that it's been very exciting to me to see the tremendous growth that the industry has experienced over the past few years. I mean, ETFs are generally fairly young. The first ETF was launched in the US in '93, and the growth of it has been really significant. So I started my career at New York Stock Exchange on the index side of the business, so working on product development and then marketing of sales of those products. And then the woman who ran the ETF business at the time there went to join SIBO at BATS at the time to launch their ETF business. She's been a mentor and a great person for me to learn from. She asked me to come along with her, so I was able. So her, along with our colleagues at SIBO, we built the ETF listing franchise at SIBO. And then when the opportunity came up at Nasdaq, my biggest, when I've seen how exchanges compete and how that benefits the ETF ecosystem for market makers, for issuers, I was excited about the opportunity to really build up Nasdaq's ETF business even further. Nasdaq has a great foundation. We have a tremendous brand, deep in liquid markets, great technology. We have a great marketing and distribution support, but we can do so much more. So I was excited to be a part of this business and really invigorate it. And we've gained a lot of momentum. I've been on board for close to a year, and we're investing a lot in the business. We're expanding our team. We're building out more tools and reports. We just relaunched our liquidity program. So there's a lot of things that we're doing, and we want to be a bigger supporter for issuers, so that help navigate the regulatory framework for new and innovative products, like things that Valkyrie is working on to come to market.
Great. do you think a Bitcoin ETF, a Bitcoin spot ETF, is going to come to market in the next year?
It's tough to speculate, but I think the Bitcoin strategy based products, so the futures based products, were a great start. It's a starting point in terms of getting the SEC comfortable with the asset class. They were paving a way for these products to come to market, and this is early innings. We're going to continue to drive forward, like as investors continue to demand a spot based product. I know issuers like yourself will continue to work to find ways to answer the SEC's concerns and look to bring the product to market. And because at the end of the day, it would be great for investors to be able to choose what is best for them, whether it's a futures-based product or a spot-based product.
Yeah, absolutely. So what's really interesting about Bitcoin and other digital assets is that it's traded on across several different exchanges, both in the U.S., outside of the U.S. How do you guys actually surveil the price changes and consolidate it in order to even publish an index or a price?
Yeah, so Nasdaq's actually the surveillance technology provider behind a lot of digital asset exchanges. So we provide our smart system, which is used by exchanges around the world for them to verify, to monitor and surveil the underlying market. And that's something that's really important. That's something that the SEC has continuously talked about in terms of for Bitcoin ETF to come to market is the ability for listing exchanges to surveil the underlying market and to prevent fraud and manipulation. So, we're, one of the first things we're doing as an exchange technology provider is providing that technology. And we also distribute digital assets data through our different platforms.
So early on, we were working closely trying to get an ETF or a closed-end fund or some kind of product out the door in the U.S. And I remember the SEC staff having a lot of problems around custodian solutions. And if you look at the Dahlia Bloss letter, it laid out the four main issues that they had with Bitcoin ETFs and asked every single person that was looking to issue one to answer those letters, to answer that letter and to answer those 4 points. And a lot of the 1984s that you mentioned earlier have to address those 4 issues. One of them was custodian solutions. And I remember back in 2017, there were a lot of problems with custodian and exchange solutions where they were getting hacked, they were getting shut down, they were losing money. And there were a few of them that really stood the test of time that went to get SOC 1 and SOC 2 compliance and have really given the SEC a lot more comfort. Are you seeing any questions coming up with custodians or any other issues that might be coming up that it'll take to get the SEC comfortable again?
You're completely right in that custody was one of the major concerns for the SEC when the first set of Bitcoin related products were looking to come to market and going through the regulatory filing. And the Bitcoin and the crypto market generally has matured a lot over the past 8 years since 2013 when the Winklevoss filed for their products. And custody is a major piece of that change. We've seen a lot of traditional institutions who were doing custody now entering the crypto custody space. So the banks that were doing it for equities, options, and other asset classes are now expanding their offering to cover digital assets as well. The demand for crypto is really, you're seeing across the board. It's not just retail anymore. You're seeing institutional looking to allocate to crypto and Bitcoin as well to diversify their holdings. So the market has grown a lot, and we've answered some of the questions that the SEC has had in the Dahlia Bloss letter, but there's definitely, I'm sure there's more work to do in terms of investor protection. Yeah,
absolutely. Well, let's get into something a little bit different outside of ETFs and outside of Bitcoin. We've had a lot of conversations on NFTs, and I'm always curious to ask people what they think about them. I mean, do you think that that millions of dollars are justified to spend on a JPEG? Do you think this is the new hot thing? What are your thoughts?
I think it's a fascinating field. Like I'm just learning all of, the NFT of the first tweet ever created and the cost that it's sold for. It's really like valuable. It's like traditional art. Now it's the new form of art. People see the value in it, and it's the price that you are willing to pay is what determines what the cost is for an NFT. And it's exciting to me. It's something that I've been looking into, like as someone who enjoys art, but even just the different graphics that have been created, whether it's cute dogs related, like the Shiba coin, the Shiba NFTs. It's just something that's fun and it's different, and it's getting people more interested in investing. And I always think that people who become interested in investing in financial markets, it's great for a broader interest in capital markets.
Yeah. Well, I remember back in 2011, I was looking at trying to put together an art ETF, right? Because you remember back then we had this thing called Great Recession,
Mhm.
and we had helicopter money, and there was so much money being printed in the U.S. A lot of people were fearful of inflation, and we were looking at ways to mitigate inflation risk through financial products, right? So we were looking at, I mean, we were looking at all kinds of crazy stuff, right? Forever stamps. The U.S. Postal Service is going to, is always going to be funded, and is probably the best tracker to inflation. So it's like, okay, well, if you have a forever stamp, then it'll rise with inflation, and art and all kinds of things that we were trying to figure out how to cram into an ETF. Now, obviously, none of it worked, right? None of it actually got filed or went out the window because there were so many issues with it. But what's really interesting to me about NFTs is that it is art, and it gives you the ability to actually digitally track it and potentially put it into an ETF type wrapper somewhere down the road. So is that something that Nasdaq would find interesting?
I mean, I think having an efficient access to any asset class through an ETF is something that's attractive to me, and I think it will be attractive to many market participants. I think the key from in terms of putting an asset within the ETF is about the transparency of the underlying assets, price discovery, being able to invest. It would always go back to invest protection, and being able to have fair and orderly market in the underlying will be something that I know our legal team and listing qualifications team and like that and others will be looking at as well.
Some of the things that you're doing is really interesting on on the marketing side of things, right? Tell me about some of the cool things that you guys have done in the last 3 to 6 months. I mean, obviously with COVID, you weren't able to do some of the big events that you used to do, like ringing of the bell at Nasdaq and some of those things. So how have you adjusted to the big in-person events over the last year and a half?
Yeah, I mean, marketing and distribution is really important for any ETF, particularly new ETFs that are coming to market, just given the competitive nature of the ETF landscape. So, as an exchange, we want to provide as much support for issuers as possible. So, we've been thinking creatively with our ETF issuers. Like you said, COVID definitely made us pivot and moving away from the in person and more digital. And so, we've been focused on digital, virtual events. So whether that's a luncheon or a webinar, those have been pretty effective. But also thinking about content creation together with issuers. So working on infographics or animation so that we can leverage that for social media campaigns, or having a video talking about the fund and distributing that through social channels or through digital ads. Like that has been very impactful. Like people are spending a lot more time in front of their computers, and it's so being able to have that high visibility and high impact is something that's helpful. But we've noticed that it's shorter the content is likely better. 90-second videos are probably the best in terms of attention span. So we do pay attention to how people are consuming this content to be able to adjust our marketing support accordingly. And also, as with we've seen a rise in retail trading, we've been focused on that segment of the market as well. So making sure we're running a survey to understand how retail investors or self-directed investors are learning about ETFs, so that we can really cater to their needs and their interests. In addition to the financial advisors or the wealth channels that we typically previously were very interested in ETFs as well.
No, that's great. Last two questions. Number one, Are you going to be going to Bitcoin 2022?
Yeah, I intend on being there. I think Bitcoin and crypto is here to stay. So we definitely want to be kept up to date on everything that's happening in the space and opportunities in the ETF industry for the asset class.
And question number 2, who's your favorite band?
Favorite band. It really changes a lot. Right now, I have for one. This is a fun fact. The first concert, I grew up in Vietnam, so we didn't go to a lot of concerts, and I moved here when I was a little bit older. But the first concert I actually been to was a Lonely Island concert, which is not your typical concert. But my husband and I love just like comedy music, and so that's actually the first concert we went to. But I love Adele, BTS, all Ariana Grande, definitely not musicians that I'm as proud about naming, but they're definitely, great. They're great musicians, and I really enjoy their music.
My kids love BTS. It's really funny.
Yeah, great.
All right. Well, hey, thanks so much for coming onto the show. Really appreciate you and your insights. Hope to have you back sometime soon.
Yeah, thank you so much for having me. This is fun.
Awesome.